Hello and welcome to Pro Trader Strategies. My name's Eric Wilkinson. Let me fix this again. I don't know how that thing keeps getting messed up. You guys may recognize me as the Wolfman. I'm here with Pro Trader Strategies. I think I mentioned that already. And Wolfman Options. I'm here to teach you some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, we do get some economic data, it being a Monday. Generally, it's pretty light, but we got some of our most important economic data in the form of Institute for Supply Management. And I'll get to that in just a second. Overseas, we also got PMI, which is Purchase Managers Index. Anything above 50 shows expansion in the economy. Anything below 50 shows contraction. And it's really important about Purchasing Managers Index because it is one of the only ones that is really forward-looking. If you think about it, these purchasing managers sees the demand before it shows up in any economic data points. Therefore, they see that demand way ahead of everybody else and start their purchasing for that demand that they're seeing. So this is a forward guidance type of forward-looking and guidance type of instrument or index. Anyway, across the pond, we got some PMI numbers, and they are about where we would expect them. German final manufacturing PMI is a little bit disconcerting or concerning, and it came in at 44.3, which was in line with expectations. But again, that is below 50. And it's not their most important economic data point. So I'm not even going to really talk a whole lot about those PMI numbers because they're coming in line with what we would expect. But here in the United States, ours came in at 52.1, expected to be 53. So, not as good as what was expected, but still above 50, showing expansion. Construction spending came in unchanged, was supposed to be an increase of 0.5%, and last month's number just slightly revised higher. Then we got the prices paid coming in at 53.2, expected to be 51.5. So any of those people out there that are looking for prices paid or inflationary readings coming out, this is one of those because it is forward guidance and it is showing the prices that they are paying to bring into the manufacturing process is increasing. Therefore, they're probably going to offset that to you and I, the consumers. All right. So that's, a first sign of inflation. Another beauty in this economic data point. And then we've got a couple of Fed governors speaking and total vehicle sales coming out throughout the day. All right. Talking about the overall markets, one thing we also haven't mentioned here is on Friday we were talking about the tariffs getting increased for Mexico to pay for some of the illegal aliens that they're allowing to walk through their country in order to get to the United States. That seems to have done the trick a little bit. At least they're talking about it. We're seeing some market reaction to that today as well. And we'll talk about that once we get on to the equities. But we can see here crude oil inventory, or crude oil is trying to trudge a little bit higher, but it came down and tested the point of control that we've been talking so much about. We've been saying that it is going to act as a target here, and that's kind of what we're starting to see. The market came down. It's acting as a magnet. All of these points of controls will act as magnets. Let me see if I've got my cursor up here somewhere. There it is. We got it popping up. So right here we're talking about with the point of control, the market wants to migrate to these levels because that's where time and volume has been spent. This is where the time has been spent down here. The volume is spent a little bit higher, but time where it gets comfortable is a place where we will see these things settle down. It seems to have come down, tested that area, maybe a little overextended to the downside, but this is where I want to see crude oil right now because of the fact that it gives the retailer a little bit more money to spend elsewhere rather than just having it tied up in buying gas every week. So I would like to see it stay down around this area, see that volume node switch down, have this volume node up here switch a little bit, kind of pull. I'd like to see this volume node come down here and create a big volume node right there. That would cause the whole paradigm to shift down, and hopefully we could stay there a little bit longer, allowing the consumer to spend that money elsewhere, create that velocity of money, and get our economy back on track. I don't think that we are really worried. Some people are worried about the recession right now, but I don't think that we are at a point where we need to worry about recession here in the United States. Across the pond, that's definitely looming. As a matter of fact, some people would say that there's portions of the European region that is already seeing, some of the major ones like Germany and France, seeing a bit of a recession, and that could pull us back down as well. But right now, not really seeing those levers and pulleys show up here in the United States. All right, gold futures up about 15 points on the day. It is unabated to the upside, but we're going to start seeing the love of gold start to, excuse me, slow down a little bit as we get overextended above the value area high. These markets, as soon as we start getting up into this area up here, that is going to be where we start seeing people take profits, especially with this kind of move higher. This move just really fast, maybe a little bit overdone, especially with the correction we've seen in the equity. So there could be some opportunity in gold to start shorting here pretty soon. I just think it's a little bit overdone, but I'm not going to jump out anytime really soon on any of these. I'm going to try and play around and sprinkle in some trades here this week, because I think that we're starting to see the market start to make a bit of a flip and turning your hands around. If you were a buyer, say for instance in the bonds, I think it's going to be time to really start looking at flipping those hands around and start shorting. So with this setup here, especially if we had the market set up like this is a perfect example. Get a little bit of a red doji to the downside confirmation. That would really make me believe tomorrow, if we got that kind of confirmation, that the market is confirming my assumptions. Finally. All right, we've got the VIX. It is higher on the day by just a couple of points. We are outside of that 20 that we tested on Friday. Came up and looked like we were going to really test it again today. A little bit shy of it, but again, looks like the markets are starting to roll over. That VIX is getting a little ahead and starting to price in the fact that we might see some of that volatility come out if the market starts rebounding. All right, Dow Jones is negative on the day by about 60 points. Again, we're starting to get these dojis where it looks like we are getting a setup for a market turnaround. Again, if we got a move like this or something, a doji like that would really start to make it look like we're going back to the point of control. I don't think we're going to see a major move outside of that, but I think that we could easily see this market move back to their points of control, especially in the Dow. But having said that, the one thing to note is we've had a lot of markets a lot of days where it feels like this one right here never got confirmed. We could see that again, and the market wants to put the thumb screws on the retailer and test this area here, which is the value area low. Anything below this down here would be really getting overextended to the downside, really short. I think that we'd see very little participation down here before the market starts rebounding, if it starts to press it. But we've seen it press in opposite directions, and the market can stay irrational longer than we can stay solvent. So we have to keep an eye on that. Now, the Nasdaq really pressing down, tech really having a tough time today. It seems like retailers are doing best out of most of the sectors right now, but you can see the Nasdaq down 125 points on the day. I talked about this time and time again, that 7,000 mark being tested. We are testing it as of right now, and that lines up very nicely with the 38 Fibonacci right here. So this is the 38 Fibonacci, and I've got a green on so you can't see it very well, but this right here is that 38 Fibonacci. So that should act as a pretty strong support. This is going to be a level where people start to look to buy. It though could easily come down and test this area where it feels like we start putting that thumb screws on people and trying to press people out of some of those longs. So again, I'm not adding a whole lot. I did cover one trade in MRK and added another one we'll talk about here in a minute. Now the E-mini S&Ps, although we're seeing some weakness there, we're not seeing as much weakness in the E-mini S&Ps as we are in like the Nasdaq and some of those high flyers like the tech stocks. Those are not high flyers, high ball stocks, I should say. And E-mini S&Ps are holding up a little bit better than we're seeing over there in the Nasdaq, which down 125 points is a big move in the Nasdaq. All right, E-mini S&Ps on the daily chart. You can see overnight inventory came in short, tried to flush themselves out. Day session made sure everybody was out, and then we just saw this weakness. Now, I was expecting us to settle in and around the highs of the day on most of the equities, just because these, everybody's talking about avocados and being up 3.5% on prices based on this tariff. Well, 3.5% on an avocado, that's what, 60 cents or something like that, isn't going to really hurt the American public and not going to kill velocity of money. All right, so there are some things out of Mexico that it could affect a little bit more, but they need us more than we need them at this point. So I think that it's not going to be a major impact on our economy here. So I think that overall arching theory as to the Mexican tariffs was a little bit overdone. I think we could easily see that kind of get brushed under the rug and start moving higher here. So I'm looking to play stuff to the upside. I mentioned I thought retails were doing pretty good today, and MRK started making this move higher. And if you guys remember, I've only had this trade on for a very short time in MRK. As a matter of fact, I put it on the 28th of the month. So that was just, right here. We started getting this top, got the confirmation, moved to the downside, came down to the 50-day moving average. That started acting as support. We got that move higher today. I decided, you know what, I'm out of this trade for a small profit. And I went into the July and I bought the 85 puts and sold the 75 puts to help finance that. Got that move. Not quite as far as I wanted to. I wanted it to go down to the 75 handle, try and cover that gap. That's where I was, and it lines up with the 200-day moving average. So all those things were working out for this trade. I originally paid $4 for this trade. I got out for $4.57. So I'm out of this trade based on that bounce. It's just not looking like it wants to break below and stay below this 50-day moving average. I thought for sure it was going to come down to the point of control right here. Thought we had come down there. All these levers and pulleys just made it seem that that was going to be something we were going to see, or at least test this area right here just below 78, maybe 77 handle. I don't think that's going to really happen anytime soon, at least long enough for me to stay in this trade. So I decided to take my profits and run. Got out for a small increase, but it's just not following through with where I think we're going to go. And the market started making that paradigm shift earlier this morning, so I decided to get out of that relatively earlier than I normally would. All right, and then I added XRT. I talked about this. It looks like retail's doing very well. We've got this pattern confirmation to the upside. Yes, it's not. I should wait to the end of the day. I'm trying to be more patient, but this one to me seems like it's a point where Target, there's a couple other ones starting to make some moves to the upside and might pull the rest of the broader retail market up with it. So I went into the July and sold the 39 puts in there for 80 cents. So those July puts, I went in and let's just write it down here. So went into the July, sold the 39 puts for 80 cents here. So the implied volatility is right there. It's basically equal to 30%, IV percent of 30. Right when I put on this trade, it looks like it's right around there, very close anyway, so it's still an opportunity. And remember, anything greater than 30 or equal to 30, that's where I'm looking to put this trade on. So as long as we can stay above this 39, any break below Friday's low is where I'm going to be out. So my out on this trade is going to be anything below pretty much 40. So if it settles below this low, whatever that is, that's where I'm going to be out of this trade. That's all I've done today. Hope everybody had a great weekend. Continuing on this webinar, you come up with a bullish assumption. Say, for instance, XRT. We look at this chart. We see that the market has come down and bottomed a little bit, starting to make a move higher. We've got confirmation. I picked a point or a target for the market to come and at least test this value area low. I think we'll easily achieve that. At that point, I'll be able to get out of my 39 puts in July. for at least 50% of my max profit. So I'm just making a bit of a move. Volatility comes out, and we'll cover that trade. So I've got my plan to trade, and I'm going to trade that plan. Stay mechanical. If you like how I teach, I talk about this, how we write down everything we do, the environment, and have all of these rules in and around our market assumption. We believe we have an assumption. Now we have to come up with a strategy, right? And I have easy steps where we can just go through, figure out everything in and around that underlying and that directional move, and come up with a strategy that fits that has the highest probability of success. So if you want to trade with high probabilities and you like how I teach, check it out at ProTraderStrategies.com, and that's all I got for you. Other than if you can't take that, take it easy.